Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Welcome again. Today I got Kira Nyland with me again, and we're going to talk a little bit about a couple of case studies. And welcome, Kira. Appreciate you taking the time to visit with me again and to have these conversations. We talk a lot about the idea of IBC, this process that we're teaching people how to take control of the banking function in life. And it can be very theoretical because that's where we start. We want to make sure people have the right process, the right ideas in place before they actually apply them to their lives. Because if you don't understand the process, no matter what products or what you do after that really doesn't make any difference. And again, we can talk about it. You can listen to our previous podcast if you want to get a better handle on this idea of how to take control of the banking function in your life and understand how banks make money. And then say, if we understand how banks make money, how do we apply that to our own personal business? And we start with the family financing system. All those are very theoretical, but today I thought we would talk a little bit about some actual case studies, how we actually put these things to work and what impact they made in our clients' lives. And I had a couple of thoughts about where we could go, Kira, and I think what I'll do today is I got a couple of business examples and quite frankly, how I do it personally in my own life. If you have thoughts about how we can implement this in your life, those are the conversations that have to be done on the one-on-one level. And we gladly have those conversations, or we can talk about the theoretical side about what is this and how does this pertain to me and how can it make sense? And so I think if we do it correctly, they're going to come together to where you're going to take this idea and really put it to work. And when I spoke out at the Freedom Forum out in New Hampshire a couple of years ago, that was the topic of the conversation: is how do you take a theoretical, divorcing yourself from the traditional banking system and put it into practice. And that's really what we talk about. And that's where these case studies are going to go, is how do we put this theoretical idea of taking control of the banking function in your life and how do we put it to work? So any questions, Kira, that you had?
Definitely not. I think the only question, and this might come once we hear the story, is my thought is, can you apples to apples, right? So you're talking about a specific case study scenario. It might be about, gosh, I don't even know, but they want to use the money for this, or let's say whoever's listening wants to use the money for this. So you can pretty much just change out the scenarios and the same principles and the same storytelling that you're about to do applies.
100%. The same. We are applying the same principles. And it doesn't matter if we're buying a car, buying a piece of business, or lending money. It doesn't really matter what we're using it for. It just, again, here's just some examples. And really this whole discussion is to get people to think, right? To use their imagination. Nelson Nash in his book said that the infinite banking concept is an exercise in reason, imagination, logic, and prophecy. So it's just the use of your imagination to say, how can I use this in my life? Because I can see how other people are using it in their lives. And that's really the reason why I want to discuss this. And the first one that comes to mind is, and there's actually a lot of talk about using the IBC concept in the real estate world. We get a lot of clients that come to us either through referrals, and that's how the majority of my clients come to me, as a referral from one client to the next, or I'm working with another agent that wants to understand this. So somebody in the real estate world's working with them, and they're calling me in to say, hey, how can you help me on these type of cases? But one case in particular was a client of mine, and he was flipping houses, and we were having this great discussion about how you flip houses. And this is probably, I'm going to say, about 8 years ago now. And I know we're creeping into 22, so it might actually be closer to 9 years now. But he came to me as a referral from another gentleman. He says, I want to understand this to see if it's something I can use in my life, which is what we get a lot of. We get a lot of those type of questions. How can I use this in my life? And so we talked about the principles of taking control of the banking function in his life and how beneficial that would be, where he can make the decision what project to use it for. And where he was making his money, and still is, quite frankly, in the real estate world, is through the flipping of, he buys and fixes up and then flips houses. And one example was when we first got started, he said, where do I get the money to do this? I said, what are you doing right now? And he was right in the middle of a couple different flips. I said, I tell you what, why don't you take the profit from this next flip and let's fund your policy? Because again, where we store our money can be really, so I said, let's store your money in your policy. That's your warehouse of your dollars. and let's apply the banking principles to it. And he agreed to that. He said, yep, I'll do that. So then he took the dollars that he made from that flip, and he made some pretty good money from it. And he funded his policy. We got going, and he goes, hey, I have an opportunity to do another flip. I said, okay, borrow the money from your policy. Because what he was able to do is he was able to finance the purchase of his property, but he didn't have the money to do all the renovation for it. And so what he was doing up until this point was he was going to outside lending sources, non-traditional lending sources, hard money lending, a lot of people are familiar with. So he was doing that. Instead of going to a hard money lender and paying 15%, again, apply the banking principles in your own life, have your own family financing system, and borrow the money to your real estate company at 15% as well. Now, again, this is a bit of a mind shift from people, because a lot of times people are going to go, what's my own money? Why would I want to do that? That would be the natural response people are going to say. And we had to have that discussion. If you love your family more than you love these hard money lenders, why wouldn't you charge your business the same rate that you were paying somebody else? Because your money was flowing to those banks, those lenders. Why wouldn't you do that to yourself? And so he understood that. He got that. He says, yeah, I see what you're saying, because he wanted his financing system to be as profitable as any other business he had. So he turned around, borrowed the money to his real estate company that was doing the flip, did the flip, made money, paid that loan to his family financing system. And now he had the principal back, plus he had some extra interest. And then he also had the profitability from his flip. So the next year's premium came from that one alone, because it was a 6 or 8 months by the time he started to when he finished. So his premium was due. So they pay the next premium. What quickly happened, and this is the part, like a discussion, because when I was asking him this is because I was interested, and I said, well, is this something that we should be doing from our business individually, what we could be doing? And he was like, yeah, he says, flipping houses are a great thing. He says he's made a lot of money doing it, or some money doing it, but he says it's a lot of hard work. It's a lot of risk, and it's a lot of hard work. And you're there all the time working on these things because you need to get them flipped, because you're paying somebody else 15% interest. You need to get this thing taken care of immediately. And so his point was, yeah, you can, but you have to be able to dedicate yourself and be there all the time, because time is a real enemy. So after he took control of the banking function, what he quickly realized is that he wasn't under as much stress, because his company still owed his financing company that money, but he owned both companies. So it took some stress off of him to be able to still do it. So that was a real key to him. And then what happened was the real transformation came when he goes, after I had done 2 or 3 of these things, and I was telling people that I was using my own dollars, I was financing out of my own family financing system to do these flips. The question came up, well, can you borrow me the money instead? Unknowingly, he moved into the hard money lending side of it. And he says, yeah, I'll lend you the money. He says, I'll charge you the same rate that you were going to pay these are the other non-traditional lenders. And so he was charging them 15%, and they were happy. And he was happy because he knew what a good flip was. And now, and this all kind of took place over a 5-year period. And then about the end of the 5th year, I said, are you still doing flips? He goes, oh, heck no. He says, that's way too much work. It's too much stress on my body. He says, I have a tough time, walking and getting around. He says, I'm saying the heck with doing all the flips. It's just too hard on my body. But he says, now I've become the lender of choice in his marketplace doing these flips. And he knows what a good flip is. He knows what a bad flip is. So he's got some knowledge that a lot of people wouldn't be able to do the hard money lending. Moral of the story is he's changed his whole business model because he took control of the banking function. And now he's having his money work for him instead of him having to bust his back and his knees and his legs to earn those dollars. And so now going forward, I might do a flip now and again, but he says, quite frankly, I want to be the lender of choice in my marketplace. And so now he's become the hard money lender. It's actually opened himself up to doing something a little bit different called wholesaling, where he goes and gets these things under contract and sells the contract to somebody else that's looking to do a flip. And he says that's even better money than doing the hard money lending. But if you wouldn't have started the process, if you wouldn't have started a policy, if you wouldn't have started taking control of the banking function of his life, there's no way that he would have ended up doing or being where he's at today, just because he wouldn't have understood that his money is more valuable to him than anybody else's money. It should be. And then when he was starting to apply the banking functions, he didn't allow himself to say, let me give you a great deal on this loan because you're going to do a flip. Why shouldn't you get paid as much as your competition gets paid? And so it's really changed his life, and it changed his approach, because now he sees things as a business person from the lending side and a business person from the real estate side.
Also from the personal side, just because he owns a policy.
And that his policy is just a place where he warehouses his dollars that he makes loans to he borrows the money and loans it to his financing company, so then it can go out and put it to work. So it's just a place for him to warehouse his dollars inside the policy, because it's safe, secure, and guaranteed. And that's what you need when you're doing lending. And he's taking the risk by either flipping, doing the hard money lending, or doing the wholesaling. That's where the risk comes into play. But that's also where the real returns come into play as well. He borrows the money at, say, 4% now, and he turns around and lends it out at 15% or 16%. That's huge. That's a huge markup. That's a huge profitability, and really has no involvement, no cost, no overhead to be able to do that. So again, that's a great story. I love telling that story because it is a transformation over a 5 or 6 year period. It didn't happen overnight, and nothing really probably worthwhile is going to happen overnight, but it was just a transformation of busting his back and working himself to early death, to now the point where he doesn't think he'll ever do a flip again. And he might, just so he can stay in tune with it. But at the end of the day, he's like, I don't want to flip another house again. He says, I would rather just finance it. And that's where he understands his money's being made. And this is the comment I made to him when I first started talking with him. I looked back at my notes at that time, and I said, the CPA told me this one time. He says, whoever controls the money always wins the deal. Whoever controls the money always wins in the deal. And he agreed to that. He says, yeah, he says, I know that I'm working for everybody else because I don't control my finances. I can't say if I want to do a project or don't want to do a project. They're telling me what I have to do. So it's just a great story of talking about how people started in the process and then built and changed and really morphed their whole thought process, because now they control the banking function, which again, I don't think that would have ever happened. He would have been still maybe today doing the flips, and he was making good money doing it. That wasn't the problem. It's just that he was wearing his body out, and now he wants his money to start working for him.
Yeah, makes a lot more sense. You're getting the same, if not more, amount of money, but with not even a small percentage of the work.
You're letting your mind do the work, and you're letting your connections, because what's making him money? Knowing people in the marketplace and understanding what's a good flip, and then having access to a guaranteed pool of money that allows you to make those loans. So now he's not actually having to go out and do the physical work. He's letting somebody else trade their time for money. Now he's just trading money for more money. But so that's one story I love to tell. And again, that's the reason I love to tell is because I want people to understand that it's not something that's going to happen overnight. It's a process, and it's a transformation by applying these same principles all the time when you're dealing with your dollars. Another example, I'll share a personal example because I think this is important for people to have an understanding as well. Having access to money can lead to a lot of good things, either through taking advantage of opportunities or protecting yourself from chaos. One of the things, it's actually in the book, The Case for IBC, it talks about having a pool of money that you store your tax liability, what you're going to owe for taxes. You store that inside your policy, and then when you have to pay your taxes, you come around, you take a policy loan, you pay your taxes. And then the whole idea is then over the year, you're paying it back. So when time comes to pay the taxes again, either in April or October, it depends on when you file personally, you have those dollars available. And it's just, you can take an existing IBC policy that's already structured, designed to do that, and say, okay, I know what my tax liability is going to be. It's pretty much going to be in this range. Let me borrow the money from myself or from my financing company, pay my taxes, and then I'll pay the financing company back, my own financing company back as the year goes along. And that, again, that's laid out in the Case for IBC. But what happened was a number of years ago, I ran into a gentleman. I've known him for a lot of years, but he was doing what we call, and we have a podcast around this, using these conservation easements, where what we're doing is we're buying a piece of real estate. And with that piece of real estate, we have the ability to say, hey, I'm going to donate this to conservation, and we can take a tax deduction for doing it. And it's something that I would refer people over to Philip and the gentlemen that do it down in Florida, because that's who the experts are. But what you have to do is you have to come up with some money in order to be able to participate in this. And so by having money in my policy, when I first started doing this, they go, how much do you want to deduct? And so the question was, well, if we could reduce my income by doing a deduction, we could eliminate some tax liability. Long story short is I went to my policy to said, hey, I'm going to take advantage of this opportunity. And so I did a policy loan. I took it out. I bought into these conservation easements. able to reduce my tax liability by about twice as much as what my policy loan was from the beginning. And so just a simple example is if I could borrow $1 from my policy to eliminate $2 worth of taxes, why wouldn't a guy do that? But it's about having access to cash, because you have to come up with a significant amount of cash to be able to do that. But again, what we're talking about in the whole IBC conversation is having a liquid, safe, secure pool of money that I can get access to anytime I want, with really no questions asked. Can you imagine walking into Wells Fargo saying, hey, I want to borrow some money so I can give it away so I can reduce my taxes? How many loan officers in Wells Fargo or any other banks are going to go, hey, that's a great idea. Let me write the paperwork up for you.
They're going to laugh you right out the door.
They're going to laugh you out the door. But they don't understand. And that's the problem, is that banks and people that make loans and make decisions on these things have no idea what you're trying to do. They have very little understanding about what your business is. If you're a contractor, if you're a farmer, or if you're into real estate, there's so few of them that have any clue on what your business is and know the business as well as you do. But they're the ones that are making the ultimate decisions about if you can move forward or if you can't move forward. And now think about if you can take control of that banking function. Now, you have to be honest with yourself. You just have to say, should I lend myself that money? Do I lend my real estate company that money to go do this flip or go buy this piece of property? If it's a bad piece of property, no matter who's controlling the banking function, sometimes you have to say no to yourself. There's a bit of discipline. I've talked about this in the past, is that it takes 3 things to make this idea behind IBC really work. It takes time, it takes money, and it takes discipline. Part of that discipline is saying no to bad deals. Saying no to saying, if the cash flow isn't there to pay back the loan, then maybe you shouldn't make the loan. That's the whole idea. So again, it takes the discipline. But at the end of the day, you know yourself and your business better than anybody else. So why aren't you making the decision if you're going to borrow money to your organization to move forward and to make investments into whatever it is that's going to grow wealth, versus having somebody else that has no clue what you're doing, but all they're going to do is look at your FICO score and they say, you missed your last 2 payments, therefore we're going to deny the loan, or we're going to give you the loan. It's up to them to make those decisions. And then at the end of the day, you have to ask yourself, who's really controlling your business? If it's not you making those final decisions, who's really controlling the business? The person that controls the financing controls the business. So those are a couple examples that we've talked about and I've shared with clients in the past as well. So
very cool. But do you have another one you want to share with us that might make it a little more relatable?
Oh, I got all kinds of great stories. So there's a couple. Actually, there's one that I had a client. We became introduced through a mutual client of mine, or a client of mine, and it was a mutual friend of his. And again, most of my clients come from referrals of other people's in the same industry. And so this guy was a referral from another contractor I had, and he's a plumber. And he's had a policy. He's been working with me about the last 3 years. And he likes this idea. And he says, yeah, this makes a lot of sense. And the reason why he was doing it was interesting. The reason why he did it wasn't so much that he could take control of the banking function, although that's now become very important to him. He wanted a safe, secure place, just kind of a separate bucket of money. And this is his words. He says, I want a place to put my money, so if the wheels come off the bus that I'm driving right now, he said, I know that this can be my fallback position. I have a place that's going to have safe, secure money. So if everything goes downhill, he says, I have a place to fall back to. And I said, yep, that makes complete sense. Having a safe, secure bucket of money is important. Again, we really didn't start with that conversation about taking control of the banking function. It was more about having an asset that was safe and secure. And it was given the security that he didn't have because he had a lot of risk in his business. He has been in the plumbing business for 5 years. He knew the volatility. He was just really getting up on his feet and going after about 5 years. And this was back in end of 2018, start of 2019. Oh, it would have been end of 2018, actually, because we just had a conversation. We just did a policy review with him. And anyhow, he started his business, started his policies, again, for just really retirement reserve dollars. And then what happened was when 2020 came and the pandemic came, it really put a crunch on his business. Just because, there's so much uncertainty. If you recall, it's almost 2 years ago. It's hard to believe that's been that long ago as we're recording this at the end of 2021. But it just, the chaos and the uncertainty, we just didn't know. And people weren't going to work. There were the shutdowns. It was the essential workers only. His employees weren't considered essential workers. just all kinds of things going on, but he loved his employees. And so he goes, Wade, what can I do here? I said, well, you have significant cash value in your policies. You've put away a lot of money. I said, if you want to keep your employees, I said, like any disaster, I said, this thing's probably going to end eventually. I don't know when. I still don't know when. I said, it's going to change. And I said, use your policy to keep your employees on. To his credit, he offered. Not everybody took it because there's a lot of other things that were going on with government money, but he offered. He says, everybody that wants to stay on the payroll, we don't have any work right now, but we'll keep you on the payroll. And he actually went into his policies, use those dollars to keep his employees. What that did, looking back now, is those employees love working for this guy because he's looking out for their best interest. He wanted to keep them going, even though they weren't able to work. He didn't have any work. He's going backwards, but he's dipping into his own pool of money that he used. He wanted for his retirement, or what he called just in case money. This really turned into just in case. And then when things started to pick back up and other plumbers were looking for employees, he had his group of employees. And he says, when we started to come out of this whole COVID lockdown thing, he says, all of a sudden work started to show up. And I was able to take advantage of that work immediately because my employees were ready to roll. Instead of having to go out and hire a whole bunch of new employees or find people or get people back because they'd left us and you have to work them to get back to you. He says, when things started to open up and work started to show up, he says, we're able to grab it, move forward. And when I just talked to him here a couple, 3-4 weeks ago, his business, he says it's never been trying to get caught up from basically 6 or 8 months worth of being shut down, the whole business being shut down. And so that's just another great story of, it wasn't intended to do that. But again, we just don't know what the future brings. And so if we have a guaranteed bucket of money to take advantage of opportunity or chaos, I've explained in previous podcasts where we've taken advantage of opportunities, but this is a real example of weathering the storm from chaos. There's a lot of chaos when COVID first rolled around. So there's just a lot of uncertainty, a lot of chaos. He used his money to weather that storm. And now his business is just really starting to take off. It's booming, expanding like crazy. He's added employees and he hasn't lost employees, which if you know anything about that contracting business, is people that move all over the place. So you expect to lose employees, but they understood what he did was huge too. To keep him on payroll when he didn't have any work, that was a real benefit. So that's a great story. I don't know that I've shared that in the past, but after I had this conversation with him a couple of weeks ago, it just really made me think and understand that we want to take control of the banking function. That's hugely important. And he understands that more now because now he's using his policies to, he bought out some competition, which is rather interesting. So he took that advantage of his competition was floundering. He says, hey, I'll buy out your business. And so he did that as well. And now he's using his policy for the banking function, but he also used it for just having a bucket of money that was safe and secure. And that treated him real well during a time of complete chaos during the COVID shutdowns.
I think the wheels off everybody's bus for a little bit there during COVID.
It did. And the question was, how long were your wheels going to be off and how do you weather that storm? Some business and some business owners did a much better job of weathering the storm. And it's typically those that had access to cash. Again, there's a lot of government money. Part of that discussion too is that by having this pool of money, he wasn't obligated to go to the government and get government money. So he made the point, he says, his accountant told me he's crazy for not taking government money, but he says, I don't want to be beholden to the government, which I can take care of myself. It was a sense of pride and freedom that he said it with his chest would puff up when he was saying it too. He said, I didn't have to go take COVID money. Where a lot of his competition, that's the only way they stayed afloat. And I didn't have to do that. And so the discussion we had with him just a while ago is, there are people that are out there looking at that. They'll look up because you can go out to a lot of sites will tell you who took the PPP money, and they don't necessarily. I don't say they don't necessarily want to do business with them, but if they have a choice, they'd probably say, "Hey, you didn't take that money. You didn't take the government handout. I want to do business with you." Mm-hmm. And so it gave him a sense of pride and a sense of freedom that he wasn't dependent on somebody else to keep his business afloat. Yeah, so it's just a great story to tell as it really has developed over the last year and a half.
I'm sure we'll have more stories down the road to share too, just where people have been able to take advantage of being their own banker and having their own pool of cash flow and stuff like that.
Yep. I think there's going to be a ton of them as we come out of this. Again, the stories from the lockdown and kind of the post-COVID lockdown era and what's happened. There's a lot more stories that are coming out every day. And when I'm talking with my clients and actually asking them specific examples of how they use their policy, it's just amazing the ingenuity that clients have to how they're using it. I've had, again, probably a whole separate podcast, but clients that said, hey, people that had properties that have tax liens against them now, and now we're taking policy loans to take advantage and to buy up those tax liens because now we're buying property potentially at a very discounted dollar, or at least when we put a couple of dollars in and getting 4, 5, 6 times the amount of money back out to when people pay their taxes. So again, businesses that weren't in your scope prior to COVID are now in your scope, and all it takes is access to cash to make it happen. And not having some banker, some processor saying that you don't, hit these check marks, so therefore you don't get the money. Thank you, Kira. I appreciate your time today. If anybody has any questions, please reach out to us. We'd love to have conversations with anyone that wants to have further discussions about how they can take control of the banking function in their lives, as well as setting up a pool of money that's safe and secure and guaranteed so they can take advantage of either opportunities or chaos as well.
Thanks again for having me. Always a pleasure.
Thank you. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.